Hey folks, Dan Frio here with your real estate update for January 16th, 2024. Hey, I got it right that time. So what we talk about on a daily basis, if you're new to this channel, is we go over where mortgage rates are, and they're right here, and then we go over the effects. What is going on in our economy right now that will play a role in pushing these numbers up or down? So in today's video, we're going to talk about the health of the economy, and then what the federal government is doing that's really going to start hurting our pocketbooks. And that's what we're going to talk about today. So without further ado, let's get over to it. So what you're seeing right here are the top 6 products people use when they're buying their first house. So there was changes to this just recently. So what this is, basically, these are not my rates. These are not any individual bank's rates. What they are is Mortgage News Daily, right up through there. They survey lenders all over the country, and they ask them these 5 questions. Now, these 5 questions might be you, but they might not be you. So let's go through them. Are you looking to buy your first house? It's going to be your primary home, so where you live, and is it a single family home? That's probably you out there if you're looking to buy in 2024. But now there's 2 more pieces of this puzzle. That you have a 780 credit score. Is that you? Probably not. And then you're putting down 25%. Yes, these numbers now represent putting down 25% if you're looking to buy your first house. So that might be you, that might not be you. If it's not you, I'm going to give you all my information at the end of this video so you can reach out to us for some assistance if you're looking to buy in 2024. Because like I said, my name is Dan Frio. I do this report on a daily basis, and I'm a mortgage advisor licensed in all 50 states as well as Puerto Rico, and I'd love to help you. So without further ado, let's get to it. You're seeing rates coming down a little bit, but these are basically rates from last Friday because we were closed, or everybody was closed yesterday for the observance of Martin Luther King Day. So let's get over to some of these numbers because we're starting to see some cracks in the foundation, folks. So daily what we do is we go over the economic calendar. You're seeing Monday we're closed, Martin Luther King Day. There's really no data on Tuesday, but Wednesday we start coming in with some of this information. But I got a little curveball to throw you guys right now. In my subscription, here's what I use on a daily basis because, again, I'm a mortgage advisor. I want to know what's going on with mortgage rates and the 10-year Treasury and news and everything else. There was one number that came in today that's kind of slipping by the cracks. It is the New York Fed's manufacturing numbers. So this tells us how much manufacturing is taking place in the economy right now. So here's what it is. This is this number here, and then basically what this is, and I'll read it because it's really important that you guys understand this. The business activity dropped sharply in New York State. This is basically going to go across probably most of the country where this is going to play a role. According to firms reported to the January 2024 Empire State Manufacturing Survey, headlines General Business Conditions Index fell 29 points to minus 43.7. Its weakest number since May of 2020. New orders and shipments also posted sharp declines. Unfilled order continues to shrink significantly. Delivery times continue to shorten. Inventories are going lower. Employment and average hours worked are declining. The pace of input prices picked up a little bit. The pace of selling increased a little bit. So basically what this is all telling us is foundation's starting to crack, folks. We're starting to have less orders. That means we need less employees. That means we can pay them less, and people are buying less. So this is basically what the Federal Reserve has been wanting. The problem is these numbers are pretty dramatic. So people keep saying, are we going to have a soft landing or a hard landing? That's what we're following right now. These numbers, unfortunately, are starting to signal a hard landing. So this is bad usually for us in the economy and everything else, but right now we focus in on what the Federal Reserve's doing, and basically the Federal Reserve saying, well, this is playing right into our role of what we're trying to do. We've increased rates higher and higher and higher in hopes of a result that less people will be buying stuff, thus bringing down inflation. If you don't need as much stuff, you don't need as many workers, you don't need to pay them as much. And so that's where we're seeing right now in this economy. So the cracks are starting. How deep they're going to get, we're going to continue to monitor that. So the other piece of this puzzle I want to talk about is the health of our government, okay? So I want to talk about a deficit. What basically is a deficit? Well, first off, U.S. deficit tops $500 billion in the first quarter of this fiscal year. $500 billion. Okay, it goes through here. This is an article by CNBC, and it was just the other day. And for the period of October 2023 to December, the budget increased by just shy of $510 billion. So you might ask yourself, well, what is a deficit? Great question. What is a deficit? Well, a deficit is, let's go over here, the situation when the government's total expenditures exceeds its revenue. Okay, interesting. Okay, so what the government did recently was they came up with a solution that they thought, and they said, let's come up with the Inflation Reduction Act. So that Inflation Reduction Act was supposed to cure costs of things and everything else. What's its main point? It's clean energy investment tax credits to provide 30% credits for qualified investments in wind, solar, and storage, other renewable energies that meet prevailing wage standards and employ a sufficient proportion of qualified apprentices. So how's this actually helping inflation if we're just looking at clean energy? Don't really know that part of it, but let's keep going on. Here's the deficit. Okay, here's the deficit, folks. This number keeps going up and up and up. And look how fast this is going. Okay, so what the problem is the government is way overspending. Okay, so what's happening behind the scenes? Well, when a government overspends or a business needs money, or that's the two main entities that play this role. If they need money and they don't have enough, so they're taking in this revenue, but their expenses exceed that. How do they create money, or how do they get money to fill those gaps? Well, you and I use credit cards. What the federal government uses and corporations, they use bonds. They issue bonds out there, okay? So my reluctancy here, or my concern right now, is the federal government is issuing bonds and bonds and bonds, a ton of bonds. Remember in our econs class, and I talk about this on a daily basis, when you have too much of something, what happens? You have too much of something. Okay, normally what happens is the price of that product drops. Okay, in this case, it's a bond. So you have way too many bonds in the market from the federal government, from corporations, and from mortgages, banks, how they get money to lend on homes, okay? So now you have all these bond offerings hitting the market, and investors are buying these things. But again, you have too much of something glutting the market. What happens? The price of the bonds will go down till you find an investor. Well, what do we know between you guys watching my videos on a daily basis? What happens with bonds when prices go down? Well, let's get over to what we talk about on a daily basis. We talk about on a daily basis is right here. Okay, this is the bond market. This bond right here is an MBS. MBS means mortgage-backed security. So it's a mortgage bond that trades on Wall Street. What you see on bonds is this. This is the price of the bond, and this is what's going on with it behind the scenes, if it's up and down, okay? So we just spoke about is if you have way too much of something, like we had way too many homes for sale, during 2008 to 2010, which really crushed the housing market. Well, now you have too many bonds in the market pushing down the prices. Then what happens to the yields? They go up. So this is my biggest concern when it comes to interest rates in 2024. We have the federal government way overspending. We have corporations that are going to start having to cut back. So that's going to be, a retraction of our economy. But again, with too many bonds out there, you're going to have prices going up or prices going down and yields on everything going up. How is this going to affect mortgages? That's what we're going to stay tuned and talk about on a daily basis so you guys understand the dynamics on how all this works. So like I said, there was really not that much news out today right through here, the general calendar that we watch on a daily basis. But when you go over and dig into my tools that I use, we're seeing some reactions in the market right now. But I want to show you guys what's happened over the last couple months. So you might notice over here where mortgage rates are. Mortgage rates, if you look over there at the corner, the 52-week high is right down through here. 52-week high and low. The low was 5.99. The high was 8.03. Well, if we dig into the numbers, basically the high was right down here. So this actually reaffirms what I'm saying. The price is here. As the price goes up, 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 and away, it's driving the price of this bond up and the yields down. So this is exactly how it works and how I teach you guys on a daily basis. So again, as the price of this bond goes up, rates are coming down. If the price of this bond starts going down, like we're seeing, many times we see in the 10-year Treasury, you're seeing rates go up. So that's my economic class for today. So if you're out there and you're like, hey, Dan, what do you do? How can I reach out to you? Because I don't have, I can't qualify for these rates because I have all the above, but I don't have a 780 credit score, and I sure as heck don't have 25% to put down on a home. Do you need that much money when you're buying your first house? No. Most of our buyers only put down between 3 and 3.5% when they're looking to buy their first house. So how can you reach out to me to get some education and at least talk through the numbers to see, do you qualify in today's market? Is your income enough? Do you have enough money saved in the bank? And are your credit scores in line to what you need to qualify for? What I need you to do is go to therateupdate.com, and here's our website right through here. What you need to do is right through here, there's a ton of information along the top, but if you're looking to reach out to us to maybe get pre-qualified or ask some questions, all I need you to do is right through here, hit the Apply Now button right there, and you're going to be on your way to do that. Or if you want to call us or email me directly, scroll down to the bottom. You're going to go through some blogs and some mortgage calculators and other things. At the bottom of this website, you're going to see two things. One is our 800 number, and two is my email address. Feel free to email me any questions. And yes, it will be me returning that email to you. And a lot of times I do it in video form. So we also have live events each Wednesday at 2 o'clock Central Time with me and Kyle Seagraves of Win the House You Love. So if you can join us at that time, we do a live event for at least an hour to answer any questions that you guys might have. So that's it for today, guys. God bless. Thanks so much for watching. If you haven't subscribed yet, please do so down below. Take care. Have a fantastic day. See you tomorrow. Bye-bye.